Let's look at how to calculate using the capitalization rate, the good old cap rate. I know you love it. Cap rate. Cap rate the formula for the cap rate and the relationship of it to some other things is the net operating income. All right, let's back up. Remember the relationship, the gross income of an investment property. That's the maximum you can earn, the maximum the owner can collect on that property. If it's a 100-unit apartment complex, that's with all 100 units rented. But you rarely are going to have all 100 units rented because there's this thing called vacancy that can happen. You might have 95 of the units rented, not all 100. Also, you might have some people that are slow to pay. So you might be spending money as an owner taking them to collections. After you factor out for those things, subtracting out for those things, that leaves you with the effective income. Gross income minus vacancy is effective income. Now, effective income is not the whole story either, because you run a household, you have personal finances, you know that you have bills to pay. Those bills include taxes, insurance, maintenance, maybe in this case management fees, all kinds of stuff. Every possible thing you might pay to run this little investment property or a big investment property, except for one thing. We're going to talk about that one thing in just a second. Once you subtract out all those operating expenses, that leaves you with net operating income, NOI. What's the relationship of net operating income to market value? NOI divided by something called a cap rate equals the market value. So if you know that type of property you're considering buying has a cap rate of 8%, just because of your research that you've done on similar properties and their cap rates, could be 8%, could be 10%, could be 15%, could be 6%. That's what you're going to find out in your study of the market. Then you know your net operating income because you looked at the financial statement of the actual property you're considering buying. So you take that net operating income, you divide it by the cap rate. That's going to tell you the market value of the property. So here's what it looks like in a circle formula. NOI on top. Remember the cap rate? Remember, rate is always one of the items on the bottom. And in this case, the market value is the other thing on the bottom. And there's our little convenient circle formula. That's NOI. One more thing. Let me refer back to our little roadmap here. Once we've gotten to NOI, net operating income, let's keep on going. Let's subtract one more thing from that. The last thing possible left that you could have as an expense is not an expense. It's called debt service. It's the house payment, or well, I guess I should say the mortgage. It's the property payment, because maybe you've chosen to use a loan. So if we subtract that debt service, or loan payment, that gives us the cash flow for that property. Now, just like NOI, cash flow has a relationship. If we take the cash flow and divide it by the original investment, how much did you pay to buy it? Original investment. That gives us our rate of return, or our equity rate of return. It's just like anything that a investor looks at. They want to know, what's my rate of return? What am I going to get for my money? What return on my investment will I get? So the way that would look in a little circle formula is cash flow on top, equity rate of return on the bottom, and then original investment is the other item on the bottom. There's our little circle formula for that one.